Welcome to CEO Money. I'm Michael Yorba. Thanks for joining with us. I have Terry Dennis, Managing Member of Texas Capital Funding. Terry, welcome to the show.
Thank you, Michael. Great to be here.
All right, Terry, you are an A-plus rated, fully accredited in the Better Business Bureau since 1989. Give us a brief background on you, and then I want to talk about the Texas Capital Funding, what you do for people in our space.
Sure. Great. Thank you. And again, thanks for the opportunity. For many years, I've been really in the same space as many of your viewers. I've been an agent, mostly on the insurance and the financial side, working with individual clients, both accredited investors, non-accredited investors, people, helping people with their retirements, things like that. On the financial side, in the insurance industry, large life cases, annuities, things like that, and really enjoying that for many years. Was Allianz Life's one of their top 10 back in the early 2000s, I guess. And so we, at one time, were very large in that part of the space, and enjoyed really what most would consider a career in helping good people with a lot of their long-term planning. And so I come to Texas Capital Funding with that background as Dennis Financial Group, which has been active since 1989. We're celebrating our 30th year as an A-plus rated business next March, and so we're thrilled to make that milestone. Not a lot of people can do that, at least not a lot that I've met, and so we're thrilled to bring all of that experience and that well-earned trust to the table, to what we're doing now, which is Texas Capital Funding. So we've gone from a small agency really servicing the great state of Texas primarily, now to something that is really becoming an industry that we have discovered and developed and are developing a model for, so that what we call financial persons, people such as myself, licensed agents with whatever licenses that they may have, and even non-licensed financial persons, can act on their behalf in a capacity as an entity, can then use this model that we're creating to raise capital amongst what the regulations refer to as their substantive and prior relationships. So we're creating a model for those people who are in the financial industry space, including but not necessarily limited to RIAs, CPAs, attorneys, insurance agents, people like that work with others that are accredited investors. This is limited to the accredited investor space. That financial person can use that entity model that we are forming right now with a very venerable 100-year-old law firm that's now global. And this model then can assist them in raising capital amongst those accredited investors. It's very exciting.
Okay. The kinds of companies and the type of capital that's being deployed, meaning is it all over the board? Are you agnostic, and is it equity or debt or both?
Excellent question. No, anything but agnostic. Although we don't like to play favorites, we have a very strong belief in our capital markets, and on both sides. So we participate primarily now in the debt side of the capital raise. However, we are making some equity plays by even playing partners and having some very robust partnerships with our principal clients. So we do it in the debt portfolio space. We work with private equity groups that are raising capital, and God knows their hunger and thirst for capital, right, for all of their deals. We're doing it in, of course, the real estate development space. And I'll tell you why, Michael, because all of those principal clients have one thing in common, and that's their ability to give us the two things that we require. Number one are acceptable terms, which of course relates to their cost of capital. If we can make the numbers work, right, then it's just a matter of how much and for how long on behalf of our clients, on behalf of our entity partners. Number two is, can they secure the note? Can they perfect it with a UCC1, a Uniform Commercial Code instrument that really helps us protect the integrity of the capital by using the same lender laws as banks do? And so we're all about safety and mitigating risk, not through diversification like many of our friends in other parts of the financial industry do, but by mitigating risk with that secured and that perfection of that note. And so if we can make the numbers work and we get that perfection in the form of the UCC1, we're good to go.
When do you see that you're going to launch? And tell me about the plans for the future, the scalability here.
That's exciting. It kind of unfolds and develops all the time. We've got a few great principles that we've been working with on a smaller scale, really testing the model, if you will, getting all the bugs and the kinks worked out before we do duplicate and scale. So we know it works. We have created a compliant model, which other models in the past have been used that weren't very successful. Well, let me qualify that were successful for a period because they worked in a way, but they didn't work in a completely compliant way. My family's been in Texas since the 1790s, and we have a saying down here that says, walk to keep your boots clean. And that's exactly what we do at Dennis Financial Group and Texas Capital Funding. People that know us know that we're straight shooters and that we're not going to help you get your boots dirty. So you walk with us, we're going to keep our boots clean by doing compliant, good business, and we're going to do it with good people. So as far as the scalability, the model is being, of course, completed now, which we're very excited about, because, again, anybody can use this if it's used properly, if it's done right. And, of course, we'll help that financial person drill down and create their own model so that they can go to market amongst their prior and existing relationships and their accredited investors. And the scale really is limited only by the number of those persons that want to use the model. So when we began to do the numbers, Michael, on how many persons there are that can create these types of entities and use this great model, well, we've got people in what parts of the industry? We've got RIAs, we've got insurance people, we've got CPAs, we've got attorneys. We've got lots of people who have access and an ability, or a capability, I should say, to employ and implement this kind of model and go to their own substantive and prior relationships of accredited investors, become that entity, and loan capital for the benefit. And so use your imagination. We're hoping to scale on some very large, I know you'll edit that out. Mm-hmm. We're hoping to scale in numbers that are into the hundreds of millions. We believe that we can get there. 2019 will be to market. You asked a question about when we hope to launch. We hope to do a soft launch by January 14, which is my birthday. At least then I'll remember the date. Right. Right. And so we hope to soft launch. We're doing systems checks until then with all of our marketing campaigning information. And another part of the equation is, and I don't want to fail to mention this, is part of our custodial relationship with a national custodian in the form of Provident Trust Group. We've got a very close relationship with them. We utilize their custodial services both on the self-directed IRA side for qualified capital and on the non-qualified. So I've had high-level meetings with them for the last year. They've agreed to accommodate, even as a self-directed IRA custodian, they've agreed to accommodate even all of our non-qualified dollars, which is very exciting. Because now we've created, Michael, what we've done is create, on the behalf of our entity partners, we've created a capital flow that is completely transparent. So all of the money moved then doesn't go through Dennis Financial Group or Texas Capital Funding. The clients open up their own account with the custodian, which we love. I love that part of the model, because they know when they've been funded, they know when money has moved, they have a result and a confirmation. It's all good. And so So we've worked on that part of the model for a long period of time, just to bring that source and that sense of transparency and confirmation, that comfort level to our partners. So we're hoping to get all of that fully launched in a hard launch by the middle of February. That's our target, to be fully launched and to begin our marketing campaign, which will be every 2 weeks via email to whitelisted financial persons with this completed entity model with a cost. There will be a small cost to entry, nothing prohibitive. Certainly won't be the price of a Reg D or a PPM. We're taking care of that, right? And in fact, to that point, we're going to operate on a certain part of the exemption that is much more costly, right, to get to market. And they'll be subset or subsetted, if you will, in another part of the regulation that will allow them to work under our exemption and, again, go to their prior and substantive relationship. So we've really done a lot of groundwork here in building a model that really, to this point, hasn't existed. And so we're thrilled with the ability to build this with some extremely capable legal beagles, asking all the right questions, getting something to market that's going to be fully compliant.
I look forward to the launch.
We do too. We will as well.
Terry, thanks for being a guest on the show.
Michael, it's been my pleasure. I hope to do it again.
Well, me too. I can't wait to talk to the companies that you're picking and your group is picking to fund, because those tend to be closely scrutinized, and they tend to be the companies that other people want to invest in once they know that there's enough due diligence in it for somebody of your caliber to bring to their group, and their group to move forward with their own personal money. So I see a lot of legs on this. Thanks for being here.
Again, a pleasure. Thanks so much.
All right, you've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.